This, of course, comes after a day when TSMC was punished, as was the entirety of the chip sector, on politics. What does this show us about the balance of this market of earnings, fundamentals versus the politics coming through?
Yeah, there's a tension there, certainly, between the demand for AI and then the politics that continues, of course, to evolve, and more negatively, as you've said. And we'll get into the details of that and the implications for this company longer term. But the near term, the most recent quarter, you've seen a 36% increase in profits for TSMC, which, of course, churns out those AI chips, the GPUs for the likes of NVIDIA and Apple, of course. It's looking at margins, Danny, of 53%. The CEO saying, when our clients and customers do well, we do well. And that is certainly articulated and underscored by that target around margins. They're also narrowing their focus in terms of CapEx. Really important for analysts because that talks to the demand that they see going forward. They've actually raised it to the higher end of their range, their previous range, to between 30 and 32 billion US dollars. This is a company that sees continued demand then for those AI chips. They continue to build out to try and meet that demand. The CEO saying that the gap in terms of supply versus demand is still wide and takes them into 2025. The other side of this for TSMC is that the smartphone market is also starting to turn around. So on the two sides, the AI chips and then smartphones that had been in the slump, that is starting to come through for them, and they are continuing to build around the demand needed for AI. Really interesting, for the first time in their earnings, the demand for AI, revenues from AI, I should say, came in above 50%, making up the majority of their revenues, more than half of their revenues for the first time for TSMC. But you're absolutely right, the political headwinds are also there.
Let's talk about those. Okay, TSMC falls 8% in the U.S. session yesterday after Business Week's interview with former President Trump, where he more or less says, we're not going to come to the rescue of Taiwan, or we maybe won't, because they have the entirety of the chip business. Again, the fundamentals for TSMC, Tom, as you were just laying out, are so strong. So what about the long term then, if there is this new geopolitical risk that we have to factor into the company?
And you saw that, as you say, because of the risk that a Trump administration, if that's what we see in January of next year, doesn't take that line around protecting Taiwan, then clearly the foundries of TSMC are at risk if Beijing pushes ahead with their idea to bring Taiwan back into the fold. TSMC are planning around this for the longer term. They're building out foundries in Japan. They're building out and investing in foundries in Europe. They're trying to mitigate some of those contingencies, but that will remain a risk. And from the other side of the political spectrum, of course, the Bloomberg reporting that the Biden administration is looking to severely increase the restrictions of the supply of tech into the chip sector of China. And that came through yesterday as well. So those two factors, both from Trump and Biden, coming to the fore in terms of the geopolitical risks for the semiconductor sector. Then you have Goldman Sachs saying, look, some of these mega cap tech names, maybe they're overspending on AI. But again, I'll take you to that gap that remains between the supply and demand. Barclays saying that gap is likely to expand not just to 2025, but to 2026.